Can you hear me loud and clear now? Can you hear me? Hallelujah. Thank you very much and good morning, everybody. I start by apologizing. Somehow I'm unable to come to Lagos. I'm still in Abuja. I'm kind of able to mess things up somewhat. The beauty is it's technology that we can all blame. Uh, I see that there are a lot of people with a lot of, would I say, knowledge that will be talking to you about various aspects of um, national policy, impact on financial inclusion, consumer protection, and all. I'm not a techie by any nature, so I'm sure we all know the story of the guy who had spent the whole night reading about Paul in religious studies and got to the exam hall and saw that the question was about Jesus and nicely responded at the top of the paper before answering that, who am I to speak about my Lord Jesus Christ? I would rather answer questions on one of his disciples, and then goes on to spew everything that he had crammed the night before. So I will leave the techie thing to the techie people. What I have over them, which I want to share with you, is experience and thought. Okay? And I ran into REGTECH, I think, around 2016. I was in Malaysia for some program that was overhyped, as they usually are. And they said someone was going to present to us on RegTech, and I sat down listening. FinTech was the buzz just before. And he started talking and started talking and he started talking. And so the first thing I realized is that there's a lot of these things we've been practicing, but now we've molded them into what we consider as new concepts. We've been operating RegTech from the days of carbon paper. Those of you that are almost as old as I am, when it made it easier to have multiple copies of a report rather than having them longhand each individual copy. And then we had ledger cards that we used to put into folders that you would sum across. And then we had presentation forms. Now, all these were applying the technology that was appropriate and available at that time to the whole concept of the regulator. But what I find more and more these days is that we're moving towards fragmentation rather than specialization. And the difference between is when you fragment, you focus on an area and then try to understand. When you specialize, you understand and then focus. An example would be something I saw in the newspapers recently, that there's an association of heating engineers. And I'm wondering, so how does that help somebody who is in the air conditioning business? Because while you're cooling the room with your condenser, you're heating, the evaporator is, I'm an engineer, I'm sorry if I sound a bit off for some of you, but you also have some parts of it that are hot. So I will try to bring us back into thinking to understand first before we then focus. Almost everything we talk about under RegTech falls into three, one of the three, or all of the three, or some combination of the three. That is helping to receive, helping to process, and helping to present. 20 years ago, if I asked my grandmother about the weather, she would look up and say, it's warm because I'm sweating, and it's cloudy, so I think it's going to rain. If I ask Siri today, it will tell me that the temperature is 25 degrees, humidity 70 degrees, wind blowing from the east, and there's a 75% chance of rain. At the end of the day, still the same rain. But yes, thank you. I have a lot more information. In future, and I've called series replacement SUMI. I'm sure SUMI will tell you that 10 feet from here, there's a 0.5 change in temperature with an angular windshield and on and on and on. But it's all the same thing. It's the quality of data that we're receiving that's more important. Also in the past, we were receiving information which is processed data rather than data. So we're moving to collecting data in as real time as possible, as fast as possible, to apply it in taking decisions. But even that we can take too far. Let's look at the concept of a regulator. Who is a regulator? We tend to look at NCC. I was listening to the lady, even though I couldn't talk, the central bank, and the likes. But the biggest regulator is actually the government. If you sit back and think about it, your money or what you can do with your money, or what's left of it, is regulated somewhat by FIRS. And the truth is they have first claim on every dime that you earn. Your ability to move around, mobility, is regulated by FRSC. And your very existence and recognizing you as a Nigerian is regulated by NIMSI. They don't register you, you can't get a passport, you can't get a driving license, you can't do a whole range of things anymore. So again, when we think about the regulator, I don't think we should be looking narrowly at would I say, the regular suspects or the usual suspects. And so that creates in our minds the opportunities that are bound. And when we start looking at the risks, also the risks that are there. A case in point to expand what has been done and also an extension of the opportunity is the Abuja Magistrate Court. And they had affidavits that they were issuing. And the way it was done then was you'd register people called commissioners of oath, and they would go with a stamp that you've given them. And whenever you come with an affidavit, they would type it out and they would stamp it. And there was a big thriving business in that way. But then there was also a lot of leakage in that people were getting affidavits and they were not making their payments to the magistrate court that's supposed to receive the monies. So what did they do? They sat down, came up with the idea of automating the request process, automating the payment process, and then providing digital affidavits, which for me was a very good idea. But then think about it, what that creates. It creates an opportunity. I know the young men that were involved in it, and unfortunately for them, that was the big success. But in my mind, that was just the beginning. Now, what does an affidavit say? It says that what you have put on paper is true, or you're swearing to the oath that it's true. And one of the most common affidavits is marriage and, of course, your date of birth. Now, we've done that for magistrate courts in Abuja. What happens if somebody goes across to Nasarawa State, to another magistrate court, and adds or reduces from his age, as we see? So it creates that opportunity of thinking beyond the immediate solution that you solved to say, hey, there's something bigger. And that can only work when we start talking to ourselves and standardizing and realizing that an opportunity somewhere is an opportunity to standardize and to expand. So encouraging all the magistrate courts across the country to have a standard format for collecting information they use for the affidavits, and a standard way of exchanging. And I think that's again where a problem is. Sometimes in a bid to show we're efficient, we over-centralize without understanding the peculiarities of what's going on. So that for me was a regulator. In this case, the courts had become the regulator in specifying what an affidavit was and what or how you would get it. And they had implemented something which we would clap for ourselves. But we had again limited ourselves because it was just that solution we're looking at. And so for us to be able to make the most, we must always be willing to think like them, understand, and therefore be able to provide bigger solutions than the immediate. We limit ourselves with our thinking. So that's what they had done. And a few other examples I'd like to share with you. The social intervention program that the vice president drove at the beginning of the government, I think about 8 years ago. And they had 3, 4 of them, but there are 2 that were very interesting to me. One was what was called the homegrown school feeding program. The homegrown school feeding program, the concept behind it was that if children were fed well in their formative years when they were in primary school, they had a tendency to develop mentally as well. So they became more intelligent because that's when their brain was developing and needed the nutrients. And to help the communities, the food that would be served to the students would be gotten from the community itself. So the parents would become the cooks to ensure quality because they were feeding their own children, and they would source the materials from the community, thereby growing the economy. Brilliant idea. But for that to be, and then there was some subvention that was given to each school based on the number of students that they had. Like I said, lovely idea. So what do you need to do? We need to know who the students are. And they went around collecting information. And the information included name, address, picture, and quite a bit. This is where the problem then starts. Who has the information? Where is it held? And when we're talking to the ministry people, they couldn't understand what the fuss was all about. Somebody has told me that he has something in a cloud somewhere and they'll keep the information. And they had information, including pictures of young children and where they were. In many developed countries, that's not acceptable. The fear of adults who, pedophiles, and what could happen with that kind of information means there have been clear rules as to who, what handles, how they keep, how they protect, how they access. We didn't have that then. And even now, to the government as a whole, it is vague. For the private sector, it is clearer how we manage that bit of information, but for the public sector, it's still not the same. The second was the N-Power. The N-Power was a program where recent graduates who didn't have jobs were given basic training and sent to the communities around where they were. And they were paid 30,000 naira every month, given a laptop, and either teaching or helping out on farms. I think they had their Greek, and then they had the medical one where they went to the health centers. Again, lovely idea. But guess what? What we had ended up creating was the largest employable database in the country. And we had no clue as to what we had done. And worse still, the company that was involved in developing it took the data and just kept it. So whenever we get dragged into these options and opportunities, we tend many times to look at it from a narrow point of view. But we can't discuss national and the benefits we get national if we limit ourselves to those narrow point of views. Even in solving the problems that we may encounter or the suggestions that we might put forward, the immediate is just a bit of it. I think we need to be thinking a lot larger than that. And the other thing you find, unfortunately, is that because you will always use technology, people will always be involved. But the cases are those who tend to use technology more tend to be affected more when there's something going wrong with technology, but also tend to know more about what they can do. So that leads me to knowledge, understanding, because we tend to assume these things. And when we do build some solutions that look at, again, in quotes, the financially excluded or those who are not as knowledgeable, we do not bring that into place. So when you create a solution that has two-factor authentication and requires that a PIN is sent and then you respond, and somebody is in an area where the signal half the time is not working, and that's the solution you've developed because of privacy. You want to be sure it is them. We've built a problem from day one. We need to understand the people, the context of whatever it is we're doing. Yeah, there's a lot about infrastructure and technology. I think my biggest concern is more people than technology. We can always get technology, but it's the people that count. We cannot add value if we do not understand or appreciate why things are being done. So we've ended up, as you've seen, with a lot of technology white elephant projects in the country. And usually they say success is easier to scale than failure. Unfortunately, we have so many of them, I begin to fear that failure might be easier to scale in some instances than success. So let's look at financial inclusion. Like I said, my rambles are my thoughts because the experts are coming to talk to you. You can't have financial inclusion without economic inclusion. Financial inclusion is not access. Financial inclusion is the ability to use. And too often we hear people talk about the access. A woman who sells sweets at a school every day so that she can have enough money to pay for the basic ingredients of dinner. Her whole life is that trade. And she's selling it to people in pupils, usually in the school, that have collected small amounts from their parents every morning. When I'm talking to her about financial inclusion and giving her a phone that will allow her to transfer and transmit and do all those kind of things. She's barely making a living. Fast forward her economic ability to having a small shop that now sells sweets by the packet rather than by the individual sweet. And then you can begin to talk about, oh, we can make things a bit easier for you. We can help you with your credit. She can now afford the benefits of the technology you want to use to bring her and include her. So we need to be clear that economic inclusion, it has to be there before we start talking about financial inclusion. Unfortunately, the conversation, as I hear it, is usually the opposite. Then I hear about consumer protection, and it's usually about complaints and about their data. But every instance and every interaction between human beings and human beings, or human beings and machines, is a potential for a consumer protection flaw. And so it's more of a mindset, a state of mind, than just the rules, the processes, and the solutions that you put in place. I walk down the street, and I belong to a resident association, and there are a number of things I have to do. I've given them my life history. Not only that, because of the address and the house I'm living in, somebody will collect that data and infer what my disposable income is. Or you, as we often do, walk into a government building and they give you a book to fill. And that book you give, attendance or whatever, but you've captured basic things. Your life too is there because your phone number is there. And we don't think along those lines. So it's a state of mind. And we need to propagate that concept that it's a state of mind. We need to ensure everything that we're doing, we have it at the back of our mind. Interaction between human beings and anything, themselves or machines, is a potential. Then, of course, we talk about cybersecurity, and we have more than enough experts on it. Some of the biggest organizations with the most technology have failed when it comes to cybersecurity. They have had breaches, and there are so many of them, hundreds of millions of dollars in losses, real or potential. But there's only one common factor always: you and I, the people. It's not the technology. Again, it comes down to the people. And everything, the three like I've highlighted, It's the people. So when we start talking about frameworks and policies, I think the techies, and there are many of us that are techies, need to sometimes step back a bit and look at the bigger picture and realize that the technology only helps. And for it to work, we need to speak very simple English, very basic English that most people will understand. The government is by far the biggest regulator and therefore the biggest opportunity when we talk about RegTech. There's so much they're doing that touches on the three main areas that we've looked at today and much more. And they're also the ones that we can, with a little bit of effort, actually add a lot more value to the community that we're in. And while regulators like ourselves, the central bank, may bring policies to regulate from our perspective of risk, because you need to bear in mind that a lot of the things we do is based on our perspective of risk and how we manage the risk or mitigate the risk. It largely comes in conflict with the private sector's motives, which tend to be more profit driven. And that balance we need to always find. But you need to understand where each and every one of us is coming from, so you're better able to find that balance that takes care of the risk concerns we have with the opportunities that you might see. And it cuts across ourselves, it cuts across NCC, as you've heard, trying to protect the consumer. I'm sure the telcos were not happy when NCC decided to unify code, because some of them felt their codes were differentiating factors and therefore marketing ploys, but they had a bigger view, as we do and as do many of the other regulators. Collaboration and communication is what would help, but is ensure there's a field that people understand the game that's being played, and we can play our role as the referee from the side without having to come into the field of play all the time. So thank you very much, the team who have put this together, for bringing me in. I apologize for the initial mix-up. As technology will always do, we'll find a way to fail. It's only you and I that I think are a bit more reliable. Thank you very much. Morning. Good morning.
Well, thank you so much, Chair, MC, and good morning, everyone.
I can hear you. Can you hear me okay? Grace. Yeah, so I think to some degree we almost need to start at the basics with technology. So yes, we can get caught up with artificial intelligence, with large language models and so on. And they're really cool things to talk about and think about how we can apply them in the financial services sector. But I think we also need to start with the perspective of what is it that we're trying to do instead of jumping into using the latest technology just because it's there or because it's exciting. I do some lecturing with the FinTech and RegTech course, and I think what's really needed in almost every jurisdiction globally is increased awareness and the availability of educational resources to actually be able to use technology in a responsible and logical way. So instead of just using technology for the sake of technology, we should be figuring out how we can apply it, and in particularly in the context of anti-financial crime. One of the things, I guess, that the financial services sector is, and indeed the wider industry in terms of the regulatory bodies, legislators, and so on, is that we are unfortunately limited by things like data privacy and the ability to share intelligence and information and so on. Unfortunately, criminal actors and criminal organizations are not limited by those restrictions. And so they're already gaining pace with the use of technology. And so therefore, if we want to be, at the position where we can actually detect and prevent financial crime, then we need to be as educated, as smart, and as enabled through technology as they are. And so I think, finding ways to actually embrace technology, but in that, incremental way, as opposed to saying, let's just deploy artificial intelligence or let's use large language models, without really thinking about the opportunities and challenges that exist within those capabilities.
Well, thank you very much, Nika. Although I may also have had some issues based on my fellow panelists' contribution, but first, let me answer your question, and then I'll come back to that if you allow me to do so. Let me say that, yeah, as we all know, technology is a double-edged sword. So it cuts both ways, and it can also have a negative implication in as much as it is also quite one of the modern weapons we can use against financial crimes. The main challenge that I've seen so far with in practice is the issue of data protection. So the issue of data protection has been an important issue when it comes to fighting crime using some of the latest techs that have been developed. They have a specific term for that. But we also need to make sure that we respect issues to do with data protection, but also human rights in general, even human rights of those accused of committing crimes, that is the bad guys. I think this is all I can say in a nutshell, but and allow me, please, to come back to this, because I understand our theme is really on public partnerships, and that I wanted to add that, in this, well, there are so many players, in the field, and it's important that they create alliances. Otherwise, we end up having duplication of ideas and wastage of resources. I've seen this with many countries that have several organizations basically working on the same area, rather. One reporting directly to the president, another reporting to the DG, another reporting to so forth and so on. So it's important that they create alliances so that they benefit from the economics of scale. And more importantly, when it comes to the definition of public institutions, we need also to expand this definition so that we include all those other players who may be traditionally viewed maybe as non-public institutions, but they are offering public services. I'll give an example of the African Anti-Money Laundering Institution, an organization which I founded. We are not driven by any profit, ideas to make profits. So our aim is to deliver those services that have been shunned by, those who are mainly driven by, who are profit oriented. So it's important that when it comes to the definition of who is public or who is in the public sector, we expand this definition in a noble way that will help us to fight crimes. Thank you, Nega. I hope I've answered your question.
Sure. So I think, and this ties in with actually how we can potentially be, pushing the boundaries with technology and how we can actually start to implement certain capabilities whilst also maintaining that, I suppose, that compliance with the obligations that we're set to. If you think about the process of identifying, suspicious transactions, for example, and then being able to provide actionable intelligence to law enforcement, right now that process is heavily manual. We have lots of people across financial institutions across the globe that are, manually looking at indicators, manually looking at transaction patterns, and then ultimately having to put that all into a story that then goes to the financial intelligence unit that they're required to report their suspicions to. And then once it moves to the FIU, they then have to go through all of those reports independently and manually as well. They have to make their own decision and ultimately take the next steps on whether to pursue prosecution or criminal conviction and so on. So if you think that, as Alex mentioned, right now we're working in silos. So every single bank has its own department where it works on these cases, and then all of those reports are routed up into the FIU, but also so are the bank next door and the bank next door to that. When actually, if you think about it, any, and this is not a piece of advice, but any criminal is probably going to have, a diverse set of financial services that they're using so that they can monetize quicker or monopolize quicker. So the ability for law enforcement in particular to be able to see what's going on holistically across all of the financial institutions that it monitors, for example, but also for each bank to be able to understand potentially where another bank has identified risks that they should also be aware of. And there's some practical limitations that exist right now, not only the ability to understand what is happening outside of our bank, but even within any given bank, we're also subject to restrictions or operational challenges, such as having to manually apply our logic and consideration to these scenarios. I think one of the ways that we could potentially improve that is looking at opportunities to combine intelligence. So not necessarily sharing data, or certainly not only sharing data, but where the risk is significant enough or where there's a justification for us to be able to collaborate more broadly outside of one institution, then perhaps we can do that better. And by applying some technical capabilities, we can also do that a lot quicker as well. That could be data analysis, which can be by any individual bank, but also then sharing that intelligence with law enforcement. And then also from a law enforcement perspective, being able to take all of that information from each of the banks that it's working with and having an ability to make quicker judgments or quicker assessments because we're now working from the same perspective. Hopefully that gives some insight to the private sector.
That's a very hard one. But what I can say is, I don't know, NECA, fellow panelists and listeners, if you have been in the army or you have done national service, you know something that's called a moving target. So it changes velocity and height at the same time. So it changes speed, it changes height. You know, you're trying to hit that moving target. And this is the same, I mean, the same concept applies when it comes to different trends and typologies of money laundering. Crooks are very smart. So they combine these even old techniques. The old Hawala system can be combined with the latest technology to make it more sophisticated and create, you know, an illusion that will make regulators make it very difficult to detect. And so we cannot really say we pin down this particular trend. We should always be aware that they mutate. These different trends, they are adapted to suit a particular environment. In Africa, crooked people are not inventing new methods as such. They are adopting just different methods. The black market peso that was invented by drug dealers in South America is now being used in dollarized economies of Southern Africa, in those monetary unions in Central Africa and some parts of ECOWAS that uses the CEFA. So you see that they combine these old methods with new trends, new methods, new technologies, for example. And perhaps that's why it's important that we embrace also technology so that we counter these mutated forms of or trends of money laundering in the region. So basically, this is what I have to say. Okay, 2 points. So first one, criminals will always be ahead of us. So this is something we need to be clear about. The only thing that we should fight to do is to reduce the gap. Because whereas criminals may be already in the 21st century, some of our regulators are in the dark ages or the Stone Age. So we need to try to reduce that gap. But otherwise, criminals are always a step ahead. If we think that we can be ahead of criminals, that can affect our psyche, and eventually we'll lose the interest in fighting crime. Second, the issue of collaboration is already part of the Financial Action Task Force recommendations that have been supported by the United Nations Security Council resolutions, and it is law in many states as far as I know. We should now try to see how we, instead of just looking at the political will, we build people's will to make our policymakers, our politicians accountable in terms of how they are implementing the Financial Action Task Force recommendation, including that one that promotes collaboration. And thank you.
Sure, and I think that comes down to trust, and it's also one of the potential barriers for growth and innovation, because we've seen that in other contexts across the financial services industry. The banks with the most money are the ones who are doing better because they can apply new technologies, they can hire more people, they result in more customers. I think whatever we do in terms of a next step, and my call to action, I guess, for everybody in this conversation will be, to Alex's point, find the use case, but then actually let's go a step further. Let's create a safe space where we can test some of those ideas, whether they be technology or regulatory or other constructs. But in terms of the outcome, we need to make sure that those learnings and gains are evenly distributed, so that we're not leaving any particular part of the financial services industry behind.
Hello. Hi guys. Hello. So my name is Hugo Pacheco. I'm an economist. I've been working in technology since I started my professional life. So I've been coding in mainframes since the beginning, and now I'm with Papersoft, and we develop last mile banking tools for to bank last mile customers that are typically hard to reach, and that's what we are going to present today. Can you see my screen now? Let me know when you're ready. You can? Okay, so let me try again. Let me know if you can see it now. Mhm. Okay. No problem. I can do that. No problem. I think it's there now. Okay. Okay. So I think we can start. Can you hear me well? I can. Okay. That's good. You can move to the other one. Thank you for the long expected slides. So my name is Hugo Pacheco. I work with Papersoft. We have been developing last mile banking toolkit technology to cope exactly what Branka was describing. It's not always a problem of technology. It's the technology that fits the right use case. So if you move to the next slide, you'll be able to see what we've been doing. Basically, we focus in four major challenge that exist in the ecosystem. The first one is related to identity. How can we in a low trust environment be able to verify customers and potential new customers in the regulatory environment where identity is a requirement to enter to play? The next point is the technology that is always a restriction for usage. Could you go back to the previous slide? In the technology, especially offline is a high demand usage in the ecosystem. So how can we enable offline payments? How can we enable technology where data is highly costly? In some of the countries that in sub-Saharan Africa, how can we are able to enable people to join the financial ecosystem? We also deliver technology for that to manage the high costs of managing agent network operation, both on the liquidity side and on the daily operational side as well, on the life cycle of the agents. And the last point, we also have technology, local technology to develop new products to distribute into this agent network that sustain the financial distribution. So in a nutshell, I have here a lot of icons that support our customers, but I've selected four use cases of our customers. If you go, can you go back to the previous slide? And basically, we've been helping in Nigeria, Airtel and PSP Bank, Smart Cash. We help them with our hardware knowledge and software knowledge, empowering their IT and development teams to come up with a device that is able to enable NIN enrollment and BVN enrollment, facilitating new addressable markets for them. On the NIN enrollment, it was actually a regulatory blockage, but this facilitates when you're growing a network into areas where regulatory is a mandatory thing to have. A new total addressable market is open, especially on north part of Nigeria and untouched people that are still with no formal identity. So this comes up as a new total addressable market, but also for agents, new revenue streams for them to make up a sustainable network. On M-Pesa and Vodacom, we've been helping on our customers on DRC and Mozambique on the digitization of agents and super agents, especially on tier-based KYC that is necessary for supporting the operations. And because we generate so much data, marketing teams develop new products and campaigns directed to specific niches. So this is how we help the last mile distribution on M-Pesa and Vodacom. And the last one that I have here also is advanced microfinance, that beyond the normal agency banking usage of the platform, they also use it for something that's kind of hot topic, liquidity in banking. So cash mobilization is very critical to any MFI or bank. And so they use the technology beyond the normal loan origination system with field officers, but also to do collections, both online and offline. That's kind of one of the very unique selling points of the platform that we have, is it allows you to still collect on cash, but with a unique view of everything that is happening with your digital fields and agent networks. So in the next slide, I try to bring my view on the data that has been compiled over over last year on mobile money. So we see a growth on kind of 30% the last year, and this is a growth that still compounds. 2 years ago, still growing. I see specifically some regulation policies that changed in Nigeria with the PSB banks, but also in Ethiopia, opening up more the market for this new entry technology. And I think this has made a sustainable value proposition. If you see the active accounts, they are stable at 13%, so the same rate as the growth. We can also see that the ecosystem is more mature, so the in and outs of with other digital products and banking system, you can see that they have stretched out now to 33%. In 2 years ago, we were at 24%. So the ecosystem is actually growing, and you can see that many of those supporting networks is coming directly from agent point of view. So the agents are going now 41%. So last year and 2 years ago, they were growing at 14% because customers rely on them, trust on them, because they ended up doing the literacy part of the journey. So the value proposition of mobile money, and at the end of the day, any digital payment solution that is out there to support day-to-day transactions is very active and robust. The system, I see the system growing with a lot of new use cases coming in. So in my next slide, I kind of bring up that we still have as cash in and cash out. How do this cash matches with digital journey? So they are not completely opposites. So even though cash has been kind of the villain here on the background of the story, you can see that the growth and trajectory of usage of cash and adoption of digital, they actually go hand in hand in emerging markets. And this is a very important topic, because probably we'll later on talk about maybe the cash crunch and how that impacts people's life. But it's normal that as people adopt digital, they still use cash to come into their normal transactions. Only when you are fully transitioned to digital, your in, the money that you get in, and the outs, the stuff that you pay, only when they match, you're in a situation where you don't need to rely on cash. there's multiple conditions on the ecosystem that still limit this, and it's important to understand that this is a normal journey. The growth of massive cash is so. India is at the high time usage of cash, reaching I think 14% now on their GDP on cash usage, and this is normal and it's very mature on usage of digital. But just to give an idea that in Africa, specifically on the context of the continent, I see that there's a lot of fintechs coming in doing also the literacy on digital, especially on e-commerce, inventory applications that start to allow entering the digital, but not taking out the cash. And as they grow into their own value proposition, start interacting now with digital payments and into the ecosystem. So I call them in this slide cash tech, but at the end of the day, they are fintechs that are based on SKU, or they are based on locations, cash and delivers on e-commerce, cash and deliver of other services that are touching both digital and cash. So this is important as the ecosystem keeps growing, so that we don't exclude anyone, because at the end of the day, everyone would be wants a fair grab of the pie for the digital economy. So in my next slide, I kind of give high vision of what would be my provisions on both on the demand push and on the supply push. So on the demand push, there will still be continuous improvements on giving smartphones to people and fairly low cost access to internet, so that people can participate on the financial ecosystem. I see that there's new projects coming in like Starlink that open up a little bit the ecosystem, accessing internet through satellites. The business case is not there yet in terms of monetary wise, but it will be. So it's a growing, mature thing coming in, and the digitization that is coming, and the support of the agent networks, teaching and giving literacy to the customer, are supporting this grow year-on-year growth of the ecosystem. On the customer side, we talked a lot about this in other panels. So people are looking for lifestyle kind of applications, or super apps, or kind of there. So there's players like M-Pesa going into the movement of both the super app for a customer and super app for merchant. So the tent is there on this kind of applications, and still other applications are coming from different angles. For example, in a good, interesting use case would be in South Africa, Moya app that is coming from a chat perspective, similar to what happened in China, and then they enter into the payment ecosystem. But the value proposition is important that fits what is important in Africa, and that's free access or low access to internet, and that's still remain one of the challenges. And the next one is what touches the ecosystem. In ecosystem, I'll put it here, the identity space, because that's a requirement to join the party. The different bilateral agreements that are being made versus the instant payment national switches. So you can see that there's a very competitive ecosystem in Nigeria, for example, having this strategy versus other bilateral agreements that would be suppressing this and giving a different route for countries that don't have this available, or at least on a low cost for customers to participate. On the overall ecosystem, I also see that agent networks become more resilient, because even though they are growing 41%, 25% are the ones keeping active on the network. I see there's a play also for this distributions, this becoming a distribution channel for other players and fintechs. So fintechs that want to play on this kind of retail space, physical cannot be taken out. And you just saw that 49% still cash in and cash out. So this is quite relevant, because I see that coming as the reliability on the agents to become sustainable on having not taking out the service that they are providing. Proximity is very important for customers, not only for doing cash in and cash out, but for trust in the ecosystem. And that rhetoric will keep on going over the next 5 years, at least. So I see that as a very important point. Beyond this, the reduction of the fees on the system, and we had new things coming up last year, like fees based on e-levy transactions in Ghana, things coming up similar to in Tanzania. So we saw a lot of new entries on tax coming into the ecosystem, even though the resilience of the system is there. But I see that probably there will be new business models that go beyond the fee-based and more on partnerships, as Branka was also mentioning. I also see that as in the vision of realm of possibilities for the future. So that wraps up my presentation. I hope this last slide would be a good insight for the next conversation that we'll have in the panel. Thank you.
Can you hear me? Hello? Yes. Okay. Okay, good. So firstly, apologies for the technical hitch. I'm Juliet. We're at M-Pesa Africa. We're looking beyond Kenya. We're looking at all our markets across Africa, which includes Tanzania, Lesotho, Mozambique, DRC, Ghana, and soon to be Ethiopia. And so we offer support for them from a technical R&D and regulatory perspective as well. And so this question is very timely because even as we look at our existing markets, the uptake has not been the same as what we see in Kenya, and that's for various reasons. So if I could just highlight top of mind or, very high level, I think regulation is a very key one, and actually the regulator's approach to, innovation and emerging technologies and how open and willing they are to engage with players. I think that's a key one. We're still dealing with a lot of, old, stringent kind of regulations towards financial services. And so unless the market or the regulator is very open about that, then that can be quite a hindrance. Something else which we tend to overlook is also customer dynamics. I think, the customer in Kenya and the customer perhaps in DRC or in Mozambique is quite different, and every day they're evolving. I think when we speak about super apps, we'll talk a little bit about, digital natives who are now the new crop of customers that we're targeting. And so if you're looking at that, you have to be very bespoke in your approach to providing services in different countries. And sometimes, a copy-paste approach does not work. It needs a lot of research, a lot of understanding. And generally, I think that has been the theme from the sessions I've joined, is that, there's no one size fits all. It very much needs a tailored and detailed approach to understanding the dynamics of that market. And then lastly, I would also speak to ecosystem maturity. I think, M-Pesa in Kenya launched over 15 years ago now. And so trying to replicate mobile money in today's market in that same way is probably not feasible. I think there's been a lot of development looking at fintechs coming up, looking at crypto, looking at blockchain. And so these are other dynamics, in terms of understanding what your market, where they have reached in terms of that level of maturity from a technical capability, from a customer expectation perspective. Those are kind of things that also will determine how successful your product is in the country. And so putting all these things together, I think I would still be amiss if I didn't mention again that regulation for me is also still a very key one. And I think now we're seeing things like regulatory sandboxes and regulators really looking to engage and understand where technology is going, what customers are looking for nowadays in their products and services, and to support innovators to be able to launch these in a safe and secure environment. So those would be my top points on that, and I'm happy to jump in again later.
Thank you. That was a good question. So the thing that we see is that picking up, for example, the what happened recently in Nigeria, called the cash crunch, of reducing the available notes and changing them for new ones. What we see is that part of the transactions that increased in agents because people were concerned what to do and they need to talk up with a human being to and sort this out. the levels of trust, as were mentioned, are quite low. And if something hits a wall, you need to talk with someone. We saw that many of the transactions, not only the ones related to cash in and cash out, are actually happening in the agents, and that could be translated in peer-to-peer because they are transfers, or they could be buying products where you use cash to do it. So beyond the cash in and cash out, there's also transactions that these agents are supporting because they support the digital literacy, they support the mobile literacy as well. So they're kind of an infrastructure of the ecosystem that it's important to keep rolling out. This is the first touch point. An example that we see as well was that during this cash crunch, 70% of the complaints that were when people went to the banks, besides the most, let's say, violent, turbulent ones, for that 70% of the complaints were actually related to and something related to electronic transfer that didn't went through. So it was generated outside. Either they tried themselves, and then they went to the bank to sort out the complaint. So the agent is someone that it reduces these levels of stress, especially if someone is entering the ecosystem. It guides you through your maturity as you move from cash intensive to digital. What we are seeing as well is that some of the opening up of these agent networks to more structured business, besides being a guy in the street with the umbrella, more being a regular point of trust that you can go. You'll be there every time because you someone trusting in the neighborhood. You have the reputational damage in your own business. But for this to be a sustainable model, what we are seeing is that a lot of companies and new fintechs and new players are coming in to tap into this distribution model, but it needs to be cohesive in terms of the what's the reason to provide this banking system services. So it's not only the fees that I generate from extra. These services can actually disrupt my cash flow in my normal business that I have as a merchant. So I'm already an open point for things such as access to loan, access to liquidity, distributing maybe e-commerce point of pickup of products. So you see this agent network as not becoming not only important for more rural areas where you need to start the enrollment part, initiative, government initiatives, maybe even disbursements like you have in India, for example, where the government disbursements are done also through the networks. You see that they play a role both in the rural but also in the urban part with the more resilience value proposition where they support multiple types of services so that at the end of the day the money still stays in the ecosystem, doesn't go out as cash out. So that's basically my view. Supporting this infrastructure is supporting both the literacy that they do every day, the trust that they pass to the ecosystem every day. Supporting them with financial tools is also important because as things are kind of piling up, they will be the distribution channel of other products that are also relevant for customers. Thank you.
Thanks for that, Winnie. So yes, as I mentioned, I think we've, even from the demo earlier, I think some of the things that they're discussing would, not be as relevant maybe 10 or 15 years ago. But now we're recognizing super apps as being part of our lifestyle. We're integrating it with so many other aspects of our lives. If it's utility payments, loan payments, services, anything basically, you can do it on a super app. So I think the objective, of course, is to increase value to the customer, and even just to go that step further, as Branka mentioned, is also to increase excellence and service to the customers, that you have a one-stop shop when you're looking for your services. And maybe also just to clarify that even when you look at mobile money and M-Pesa, we've gone way beyond just the standard P2P transactions and B2C. We're now looking at loan management, asset management, merchant payments. So there's lots of other services that are now available, and now putting that all together onto a super app, it provides for the current customer, being able to address their needs, and also being able to give them a wide range of services. And I think as we talk about digital natives, I think their interest is not in sending money. Their interest is not. There's so many options nowadays. As I mentioned, there's been an evolution in payments. There's blockchain. There is Bitcoin. There are so many different platforms that these younger generations are able to leverage, that mobile money would not be, at all interesting to such an individual, such a customer. And so being able to provide that that stickiness through your super app, and I think the guys earlier have demonstrated just how versatile and diverse these super apps can be, and we're no different. We're looking to leverage that, I think, as everybody else, and to increase value to our customers. Okay, thanks, Winnie. So I think if the question is around interoperability and sharing, being able to make payments across operators and P2P and B2C and even including other players in the ecosystem, I think as an industry, I would speak confidently to say that we are definitely pro interoperability, to say that we do support cooperation. We don't want to be duplicating efforts in terms of infrastructure or also making the consumer. We also put the consumer first to think: do you need to have 3, 4, 5 different lines in order to send money across different platforms? So I think the how maybe is where the question comes in, and here is where we talk about bilateral agreements. So between some of the MNOs, the telco providers, and for example, banks, between the telco providers and themselves. Typically, that is a market-led approach where the banks and the MNOs and any other fintechs in that ecosystem will come to an agreement in terms of their commercial terms and something that works for everybody. And then another approach would be where it is kind of mandated by the government, and a lot of countries in Africa are now introducing national payment switches. And what this requires then is that everybody who is in that ecosystem playing in that space would then plug into this one platform, and through that platform be able to integrate all transactions and make sure that interoperability is indeed possible. So I think if the question is whether it is possible or whether it is key for our industry, I think the answer is definitely yes. I think there are some questions around maintaining governance, good governance, sustainability. What is the costing model around some of these national payment switches? How do we ensure that the commercials set up between the entities, a market-led approach? How do you marry basically a market-led approach and a national switch approach to ensure that we do have the interoperability, because there are definite benefits across the board for everybody. Thank you. I hope that answers the question.
which all of this is anchored on: technology, regulation, and social engineering. I want to say a big thank you also to Lagos State Government. FITC, one more time, we recognize you. Thank you so very much. And GSMA, are we ready for you guys, as the case might be? All right. GSMA, I can't even see the slide also. I'm going to continue talking. Well, I want to also say a big thank you to Alliance for Digital Innovation in Africa. I think one of the things I wanted to mention earlier on is the role of SANEF in driving the agent banking, agenda, especially with the CBN policy in terms of go cashless and ensuring that we're able to drive the financial inclusion targets. And SANEF was able to do so much in terms of building, the ecosystem for agent bankers. Nevertheless, but like Branka actually mentioned, we have to be able to go beyond all of that now into digital banking services and ensuring that a lot of these benefits actually trickle down to the bottom of the pyramid. The bottom of the pyramid obviously make up a larger percentage and degree of those who are underbanked. And so you're going to ask yourself, how much are we going to be able to actually impact if we do not take cognizance of some of the concerns of this particular aspect or particular part of our society? You want to make sure you take that up. And I hope that perhaps next year SANEF also will be more involved in this REGTECH African conference, because we need to hear some of this whole issue. We've looked at issues about some of the challenges that has to do with POS, and I think it was one of my very good friends from Imelda who actually mentioned that some ATM don't seem to be dispersing cash. My dear, it's sometimes very challenging for a lot of us in Africa, especially in Nigeria. However, some of those new solutions are coming in where we are beginning to leverage on biometrics, looking at sometimes, all these kinds of platforms to help us conduct our transactions. And so, ladies and gentlemen, I want to say one more time a big thank you. As we celebrate Africa Day as well, we will ensure that we are doing what is right at all times. After this session, we are going to obviously go further to our lunch, and then we are back for the two final parts. But let me quickly say a big thank you to the media guys in the house. The Guardian is here. Please, can you put your hands together for the Guardian? Please put your hands together for them. Thank you very much. And that's the photojournalist from Guardian. Make sure your faces come out, or you want to see it on the pages of the newspaper. It helps in terms of brand positioning. Of course, leadership was very much here, and I'm sure they're going to get a lot of the stories. We want to say a big thank you to Sun Newspaper. Business Day, thank you so very much, because we need the partnership with the media to be able to carry a lot of this information beyond where we are. And so, ladies and gentlemen, even though I talk for a living, you can sense that I'm beginning to feel some kind of cold. The AC here, we are not in Canada. Please, can you guys try to adjust the AC here before some of our own dentition starts taking a dance? But nevertheless, Mary is ready. And then how does it feel with the financial literacy aspect of it all? Sorry? Okay, she didn't hear anything I said. I'm very sure she wants to be able to get off the stage and make her presentation. Over to you, Mary.
Thank you so much. I'll try and be as brief as I can, and it doesn't feel nice being the person standing between people's lunch at this hour. So you can go to the next slide. So one of the things we do at the GSMA, beyond just representing the industry, we develop guidance notes and best practices, and also we gather insights that can help inform and grow the industry. And financial literacy is one of the things that we've been looking at to be able to help bridge the gap. So there's a lot of financial inclusion, but there's a lack of financial health, and also there's a bit where we're also trying to help inform or guide how we can actually help consumers become more financially literate and be able to help them grow just beyond just having access to the banking or mobile money services. In that respect, we'll start by just looking at what is the basic of financial literacy. So this is the ability to be able to make sound financial decision and be able to acquire the necessary knowledge and skills, confidence and competence to use financial products and services. And it's also one of the way to make to be able to bring consumers, and also be able to bring consumers into a more knowledgeable financial inclusion ecosystem, and to also be able to help them take up more products just beyond, as I said, having a mobile money wallet or having a bank account. I'll go to the details of what is the current state of mobile money, or what is the current state based on mobile money. So, according to the World Economic Forum, it is estimated that 70% of the new value that will be created in the economy in the next decade will be based on digital-enabled businesses. In 2022, we had 319 mobile money services deployed in 102 countries. 106 billion of this were based on mobile money registered accounts, and 62% of the adults in sub-Saharan Africa actually have a mobile money account. The number of registered mobile money accounts has actually grown from 2021, where we had 104 billion mobile money registered accounts. So this is a growth of about 2 billion, 0.2. So this has contributed to a more inclusive digital economy, and there's also inclusion of previously excluded persons and the underserved groups. The growth in this financial access has also led to financial inclusion. In the results of this, we've also seen more regulators increase their focus on addressing financial literacy challenges through the development of financial literacy strategies and financial inclusion strategies. It's estimated that about 71% of the AFI members. So that's the background. Where are we currently? Infrastructure and access, as has been said by our previous speaker, has become a very crucial element to meeting the digital financial inclusion goals. Initiatives may also go further to be able to tackle the knowledge, confidence and trust needed for individuals to use the technology and services at their disposal. According to the last State of the Industry report by the GSMA, lack of knowledge was actually cited as the second highest reason that is hindering users from registering for a mobile money account and actually even being able to use it. The World Bank estimates that 1/3 of the mobile money account holders in sub-Saharan Africa could actually not use their mobile money without the help from a family member or an agent. Women are actually more adversely affected, at 5% more likely than men to need help using their mobile money account. They state that 1 in 5 adults in the developing economy who receives a payment or receives any money ends up paying unexpected fees of the transaction. So these consumers, we find that are at a high risk of abuse. So where are we as a continent? So where are we currently in terms of mobile money? We have 116 live services. These are 166 mobile money services in Africa. We have 781 million registered mobile money accounts. However, 291 million of these are only active on a 30-day basis. In terms of mobile money agency, we have 6 million registered agents in West Africa. We have 2.4 million in East Africa. We have 931 in Central Africa and 10 million in Sub-Saharan Africa. However, despite the number of registered agents, you can see the number of active agents actually reduces. In West Africa, from the 6.4 million registered, we only have 2.1 active agents. In East Africa, the numbers as well as at 1.6 active agents, while in Central Africa, we have just slightly less than 500,000 agents compared to the 913 that have been registered. Next slides, please. So what is the current state of financial literacy in Africa? S&P Global, who does a global survey on financial literacy, say that Africa actually has the most illiterate adults. And the highest country with financially illiterate persons is Botswana at 52%, while the lowest is Somalia at 15%. Nigeria, Kenya, and South Africa are at 26, 38, and 42% respectively. That's the number of financially literate in this market. They also note that the topics that that most adults do not understand, it's topics on interest rates, loan requirements, savings, budgeting, and loan risks. So what is the next step? As a GSMA and being an industry association, we decided to come up with a financial literacy toolkit that will help drive financial literacy and development of financial literacy, training and initiatives among critical stakeholders in the ecosystem. So what is this toolkit? Basically, it's a guideline document that has a set of resources and best practices on how to guide, and that guides on development of trainer trainings, manuals and initiatives. It also guides on development of end user trainings, collaboration of stakeholders, and how best to cooperate with industry needs on financial literacy for current and future consumers. As one of our previous speakers said, there's a lot, we all know we need to collaborate, but there's a question of how. And that is something that came up when we were doing our research during the development of this toolkit, where a lot of operators and a lot of the developmental agencies that we worked with in developing this were questioning, how do we collaborate? How do I get to the operator? Well, the operator is asking, how do I get to work with these agencies? So we felt there's a need to be able to guide how those engagements can happen. It also highlights the importance of financial literacy and awareness of mobile money. This is in correlation between financial literacy, mobile money usage, and income. We also developed a checklist for mobile money agents and consumers. So it's one thing to develop a training, but without a proper checklist to be able to see, are we meeting the needs of the consumer? Are we addressing the challenges of the consumer? Have we delivered? Have they had, as in, did the training actually deliver what they were expecting? So the checklist is actually meant for them to check on these aspects. I'll go to the next slide where we have now the approaches that we recommend in the literacy toolkit that can be used. We outlined some stakeholders, and we started with the digital financial service providers. This was followed by the mobile money agents, the government agency and development agencies, and then we have the regulators and governmental agency and policy makers. These are critical stakeholders in the ecosystem who we felt have a very key role to play in delivering this financial literacy. And for the digital financial services, what we recommend for them is they need to start by providing training to their agents. So you provide a trainer of the trainer training. One of the things we noted during the research is that even the agents lack that financial literacy, and at times they are unable to even give proper support to the customers. We also highlighted who in that chain of agents should actually be considered and is as a must should be involved in the training process. For the rest of the stakeholders, that is the government agency, the agents themselves, the providers and developmental agencies, we actually recommend them supporting operators in providing end user training to consumers. And we note that despite just giving training, first critical element is you need to do an assessment of a need gap assessment for the consumers. However, there's some key elements that need to be considered when you're designing this financial literacy training. One being language, the other one being gender, the third being disability, age, and the tools that you're going to use when you're designing this financial literacy training. And lastly, and key that has been missing in most of these initiatives is monitoring and evaluation. We have a lot of initiatives, but who's monitoring to actually assess the impact? The third stakeholder in this would be the regulators and government agency and policy makers. As noted, most have developed national financial inclusion strategies. However, we note that there's a need for more collaboration. They need to involve operators to develop a digital financial service focused financial literacy training. They also need to implement policy measures and regulations that actually align to the needs and the gaps that are in the market. There's also the need to adopt a multifaceted strategy that support the development of digital financial education plans and program. As one of the speakers rightfully said here, we need to start from the ground going up, from the small children going up. However, when it comes to the digital financial services, there's also a very big gap where there's also lack of the digital skills. And it's prudent to work with the operators to know what are the gaps that their customers are facing, or what are these challenges that their customers are facing, so that the literacy trainings that you're coming up addresses those challenges. So why is financial literacy important? This is my second last slide, and I'll go just through it. We see that financial literacy actually helps contribute to financial inclusion in that it helps drive informed uptake and usage of digital financial services. As I've shown you in the numbers before, we have 1.6 million registered accounts globally. However, only 586 million of these accounts are active on a 90-day basis, and 401 of them are active on a 30-day basis. That tells you there's still a gap. Yes, there's a lot of registration of mobile money account. However, is usage correlating to the number of people who have registered for the services? There's also the part where it will help build consumer confidence and trust. According to the consumer survey we did in 2022, we found that some of the main structural barriers to account registration include lack of trust. So it goes back to the fact that consumers still do not trust because they lack the understanding of what is this service and how is it helping me. The drive for digital financial products offering quality. So with financial literacy, and one of the things we are encouraging is embedding it in your services. We see that it's going to drive product quality, just going beyond offering a service of being able to transact. Now that is adding an additional layer whereby consumers are able to, as we've been told, they're being encouraged to use their account, learn while doing. So that is one of also the aspect that we'll see financial literacy drives. So as a recommendation, and this should be my final slide, then we can all go for lunch. We recommend that you develop and implement financial literacy program and initiatives that address financial literacy gaps in the market. So not just developing one-fit-all-sized literacy manuals or coming up with one-fit-all literacy training tools. Conducting a thorough market assessment by providers to inform the training focus areas. Supporting financial service providers in developing financial literacy training manuals and content. There's also a need for collaboration in delivering financial literacy training. There's also the aspect of consulting and involving financial service provider during financial education policy formulation and development. And lastly, we recommend that you coordinate monitoring and evaluation of financial literacy initiatives and gaps for impact assessment and data sharing with all stakeholders. And that's the end of my presentation.
Please, can we put our hands together for her? It's been a case of managing time, moment, patience, as a case might be. And that's the beautiful thing I realize with my audience. They are very people who are much more interested in all of what we have to offer. And so, ladies and gentlemen, as a way of maximizing our time and ensuring that we also are able to move in as quickly as we can, I'm going to take the last track before lunch, which is going to be on cybersecurity and privacy. I took a personal poll earlier on, and some people said, listen, let's have the cybersecurity first, and then we can go for lunch. So, ladies and gentlemen, I want to be sure that Femi Jayola is here. Is Femi Jayola here? I know I called him earlier on, and he responded. Okay, the person moderating this session is Madam Adedoyin Odunfa. Madam Adedoyin Odunfa is the CEO of Digital Jewels. I just want to be sure by blessing if Madam Adedoyin is ready for us so that we can moderate this session quickly. This session on cybersecurity and the privacy is one that is almost similar to what we actually also explored yesterday in some of the issues that had to do with the challenges of our modern day in terms of engagement and interaction. And we want to be able to get that out. Some of the questions that were asked actually came out from the consumer protection track. And so I want us to quickly just wrap up the cybersecurity privacy and then realize that they are the ones that are going to be holding us before lunch. So I'm very sure they will just go straight to the meat of the conversation. I want to confirm if Benga Hamstrop is also in the house here. Ladies and gentlemen, great. I can see his hand waving at me. And that's the JRC leader, ex-general counsel, chief compliance officer, and chief risk officer of InterSwitch Group. We earlier had one of our moderators who is from InterSwitch. That itself is great. And so if Blessing confirms quickly with me, Adedonyo Dufa being available, we can quickly go in. Can I confirm if Samuel Asinyabola is in the house already from KPMG? Oh, fantastic. That is great. So all of you are just here. Apparently, my moderator is obviously going to be joining us virtually. But I think we can kick off with this because the three gentlemen are far more qualified to be able to explore this conversation. And we're looking at how should banks grapple with regulations when crafting their cloud strategy. And so, ladies and gentlemen, please can we put our hands together for Femi Jayola as they come up, the Group Chief Conduct and Compliance Officer at Access Bank PLC, as he takes up his own position. And of course, Samuel, you want to follow suit. Asinyabola, Associate Director, Cyber and Privacy Advisory for KPMG Nigeria. KPMG obviously doing so well in terms of what you guys do, leading in that aspect. And it gives me great joy from InterSwitch, Benga Hamstrop, our ex-General Counsel and Chief Compliance Officer, as well as Chief Risk Officer of InterSwitch. This is great. Madam Adedonyo Dufa is there, founder CEO of Digital Jewels Limited. It's good to see you, ma. Can you hear me? Good afternoon. Can you say something, Madam Doyin, so that I can be sure I can hear you? I just want to quickly mention a caveat that, gentlemen and madam, you are the ones keeping us between here and our lunch time. So I'm very sure you'll be mindful of that. Are you comfortable at this spot? Sam, are you comfortable? Okay, it's better you go that way because I'm not too sure that we can capture you here. Hello, Madam Adufa, can you hear me?
Loud and clear.
Oh, fantastic, fantastic, ma. So you are moderating this session for the next 45 minutes more, plus or minus, but I'll get back to you. And then you have your panelists right here seated, and then the moment starts over. Right now to you, ma. Thank you very much.
All right, thank you. Good afternoon, everyone. Good afternoon. It's great to be joining you on the conference today and to be moderating this panel. Unfortunately, I'm not able to join you physically. I'm currently out of the country, but thank God technology makes this possible. All right, so I've been told we're standing between yourselves and lunch, so we'll go straight into the panel. I'd like to thank the panelists for being here. And our panel today is looking at, I believe, a very interesting topical issue. We are trying to understand how banks should grapple with regulation when crafting their cloud strategy.
Hold on a moment, ma'am. Pardon me, ma'am. I omitted a very important aspect of the program, which is that this session is running concurrently with the virtual assets track. And that one is basically virtual. So if you're going to join us through that virtual asset track, make sure you go through your Zoho Backstage app for attendees. Loretta Joseph will be moderating that aspect. All of these guys are joining online, so to speak. Thank you very much, Ma. Over to you.
Right, thanks. Okay, so we'll go into the panel. We all know what cloud computing is. It is the provision of on-demand services, scalable computing resources, and services over the internet according to user requirements. And there's a whole portfolio of services that cloud can provide for us and is already providing for us, from software to infrastructure to all sorts of platforms, all sorts of different services, a lot more. And there are many benefits from cloud computing. Famed benefits include cost efficiency, they include convenience, they include the ability to not have to worry about some computing hygienes, things like backup and recovery, storage capacity is scalable, and a lot more. However, as with initiatives like this, they also come with risks. And the risks include security and privacy, which is what we're going to be looking at today. They also include things like dependency on the cloud service provider, vulnerability in the cloud platforms, also related to security, possible downtime, and indeed regulation. And why is regulation a risk? Because the regulation tends to vary from region to region, from territory to territory. And of course, the key thing about cloud is that it's borderless. All right, so for cloud services to be able to deliver these value propositions of, cost efficiency, convenience, and so on, it's important that they're trustworthy. It's important that we have safeguards and controls and countermeasures to manage the risk. And so really, the question for us this afternoon is how our organizations, especially banks, how can they reap the benefits of cloud computing whilst also mitigating the risks? What kind of strategies do they need to put in place that will deliver this? How can technology facilitate this? So this will be the focus of our panel. I'm going to go straight to interrogate our panelists, all very accomplished professionals themselves. And I think I'd also like to say well done to the organizers of this conference. I think it's a great initiative, and I'm sure that the past 2 days have been very beneficial for those who have been able to attend. So I'm going to start with Binga. Binga, why do organizations need a cloud strategy? Seems like an obvious question, but I think it's an important question for us to start with. Over to you.
All right. Thank you, Ms. Odunfa. There's a saying that goes, data is the new oil. I'm sure a lot of you have probably heard about that. And indeed, we all know how, in today's world, how important data is to every single organization in every sector, particularly in the financial services sector. We know the type of value you can mine from refined data, the kind of insights you can get, how you can improve your business, how you can get business insights, competitive edges, and so on and so forth, myriads of things you can do with this. The question then becomes, with this data and with the myriads of data, the amount of data being created every day by every organization, particularly again in financial services, per millisecond. The concern then becomes, how do you begin to then control this data, store this data, manage this data, process this data? The risk that accompany it, how do you deal with that? And then, of course, the options then become, okay, do you then go the traditional route, which is invest in infrastructure in-house, on-prem, buying servers in the old way, putting resources in that space, training your people, and basically holding your own destiny, or going the way a lot of organizations are going now, i.e. cloud computing, where you have all these companies that provide these services to you, and you just outsource to them, and they provide these services to you. Of course, increasingly we know in today's world everybody is moving in the direction of the cloud. So the question then becomes, what risks accompany if you intend to go with the crowd? Of course, the cloud has a lot of advantages. Mr. Odunfa has already iterated some of them. I'm not going to go over them again. But the risks that accompany them then become a big issue. Risk around how do you manage your data? How do you ensure that security is top-notch, compliance, regulatory compliance, data privacy, and so on and so forth. And that's the reason why you need to have a proper cloud strategy. Because the cloud strategy will help you align your organization's objectives overall with the need for you to also balance with compliance, regulatory, and also data privacy, and so on and so forth. So it's important you drop that cloud strategy so that from the top of the organization, there's alignment. As you're executing your business strategy as well, you're also taking care of the security and compliance related issues as well. Because, across the world, we keep hearing about fines that people get, hit with. Capital One recently got hit with a fine of about $80 million, and they had to settle about $190 million in lawsuits due to data breaches. And even though you do have, cloud support, it doesn't necessarily mean that you are hunky-dory. So you still need to take steps to ensure that you put everything you need to put in place to secure that space.
Okay. Okay, thanks a lot, Benga. So basically, the strategy that we need to put in place should help us to mitigate the risks that are associated with cloud computing. And my experience has been that in practical terms, a lot of people just find themselves, it's happenstance. You know, you start with a little cloud service there and a little there, and before you know what's going on, you're on full-based cloud support, and you didn't really plan how you got there, or you know. And so when you take that type of approach, the risks are heightened, because then you are encountering risks that you haven't identified and you don't have a plan for, and therefore you haven't mitigated them. And therefore, the likelihood that you will experience downside risk is much, much higher. You know, so wherever we are today, let's stop. I mean, I'm sure everybody in the room has some kind of cloud-based service or the other. Everyone from O365, the whole plethora. But it's not too late. It doesn't mean that if you didn't have a strategy at the onset, you have to just, all hope is lost. No. Wherever you are is worth calibrating and trying to understand how then do I reap the benefits, and there are many, of cloud computing, whilst at the same time ensuring that I have full visibility of the risks. Benga has said that data is usually, you know, what the cyber adversaries are out they're looking for. And, you know, we call data these days, he said, we call it the new gold, we call it the new oil. Typically in cybersecurity parlance, it's called the digital crown jewels, because, you know, it's the most prized possession that a lot of cyber adversaries are looking for. So I think the message here is we do need a strategy. Wherever we are today, let's stop and let's try and be a bit more deliberate in our approach to the cloud. So if we do then need a strategy, what should be the key considerations in crafting this strategy? And will these considerations differ if it is a public sector or a private sector organization? Samuel, would you like to tell us, please?
So thank you, moderator. Thank you for that question. And just to say that we like to appreciate the organizers of this event for putting this together. I think this is very good. What should be those key considerations? And I like the response that Benga gave in terms of why we need a cloud strategy. I'm going to start again, looking at the alignment with the business strategy. So when you say what should be those key considerations when we're putting or crafting our cloud strategy, the number one thing is that alignment with the business strategy. Now today we know that almost everyone is using the cloud in one form or the other. But it's important, if we're going to, as a corporate organization, go all out to migrate to the cloud, there must be that alignment. And we need to document whatever it is that we call the business objectives. So some want to achieve agility with cloud. Some want to achieve operational efficiency. Some people want to achieve regulatory compliance. Some want to achieve so whatever it is that you have in mind as the business objective, those business objectives must find their way into the cloud strategy.
I've lost sound here.
Okay, thank you. So before we begin to make decisions around what kind of cloud do we want to implement, or are we doing a one model? Is it a multi-cloud? Is it a private cloud? Is it a public cloud? Where to start with is to identify what we want to achieve with the cloud. So whether it is speed to market, whether it is operational efficiency, I think it's important to first define that. And so that will guide all that we're going to do. Number two is to take a step back and say, as of today, what are the services that I'm running? In technical parlance, we say the workloads. What are the workloads that I have today? Where are they? What are those things that I want to move to the cloud? That assessment is quite important if we are going to have a cloud strategy that will achieve the business objective. We need to take a step back and say, what are the things that I have on-prem today that I want to move to the cloud? We also need to assess that and say, what will be those new things that I'm going to have in 1 year, in 2 years, in 3 years, that I would like to move to the cloud? All those kind of things must be assessed, and we must be clear on how those things will affect the type, the model of cloud, or even the cloud service provider that we're going to choose. So until you have done that assessment and you are clear on what workloads you have, what will be the workloads in the next 2 or 3 years, I think we may be doing a disservice to our organization if we rush into the cloud. A lot of people start by saying, oh, we want to choose this particular technology. Oh, we want to just choose this. Oh, we want to choose this model. But for me, that is not where to start. As far back as maybe 3 years ago, there was a research done by KPMG and Oracle on cloud threats. And over 75% of the respondents say they've experienced one data breach or the other regarding cloud services. So before we get ourselves into a situation where we're losing critical data, it's important that we have the right strategy. And those key factors must find their way into that strategy. The third one I will speak to is regulatory compliance. Before you choose that cloud, before you choose what you move into the cloud, what are the security and regulatory requirements that you need to fulfill before you move those things into the cloud? I'm going to just stop here. Thank you.
Thanks for that. Thank you for that. Some interesting points there. Very important that we align what we want to do with our cloud services, with our business strategy. We shouldn't be going in different directions, as sometimes technology does. It must support, it must enable, it must facilitate, it must empower your strategy. So we need to make sure that that alignment is there. And then, he also spoke to making sure that you have clarity about exactly what assets, what information assets, what services, which are again defined by what is critical to your business strategy. And then finally, what is the regulator saying? What regulation are we bound by? What regulation applies to us? And how can we comply whilst also reaping the benefits? And so we're coming now to Femi, because we're talking specifically about banks today. And Femi, we would like you to tell us how widespread is the use of clouds in banks in Nigeria today? What benefits have been realized so far? And what risks have you seen play out today?
Okay, thanks, Mrs. Odofa, and good afternoon, everyone. It's a pleasure to be here. I think the way I look at it is that I think banks have come to the realization that cloud computing is the way to go. I think that is not in doubt whatsoever. But in terms of how widespread it is, I will look at it in terms of banks in two major buckets. I'll look at the first bucket as the typical traditional banks that are evolving gradually to digital-enabled banks, and banks that set up from day one as digital banks. So for the banks that set up as day one as digital banks, clearly they've adopted the cloud computing strategy from day one. And it makes sense because the idea was to be nimble, agile, and be lean and efficient in terms of how they provide services to their customers. For the traditional banks, it's more of an evolution, a journey, which I believe all banks have started. There was an article by E&Y where they looked at about 89 banks in terms of how the adoption of cloud computing has been, and 75% said they've actually commenced that journey, which just supports the fact that all banks have come to that realization that that is the way to go. The other thing to look at is around how do you now proceed. So banks being what we are generally conservative. So a lot of banks have started that journey, like I said, but like my colleague said, it has to be a strategic intent behind it. So what you see most times is that a lot of banks are taking it gradually. So they start off with the basic Microsoft Office applications, move it to cloud. Then you start gradually moving your other applications or servers to that environment. But we need to realize that it comes with its benefit and risk, like Mrs. Odufa alluded to. So in terms of benefit, it gives you scalability and flexibility. Early this year, there was a cash redesign policy by the central bank, and all those cash-enabled transactions then had to go on a digital platform. But then the banks had limited capacity, right? So the ability to scale up capacity was a challenge. So you had a lot of failed transactions, customer complaining about failed transaction. It was because banks were not able to build capacity in that limited period. Then you now see the migration of a lot of people to all these digital banks because they were able to scale up easily. So cloud computing as a strategy enables you to be scalable, flexible, and nimble. So if you need additional resources, just talk to your service provider, scale up. As opposed to going physically and looking for vendors to supply you servers that you now have to bring in and import and then start setting up. So these are some of the things that comes with a cloud computing strategy. But then there needs to be a logic behind it. You need to do your risk assessment. You need to determine what applications and what period of your journey are you migrating to the cloud, because it comes with its own risk as well. In terms of risk, it's clear to us cybersecurity is a challenge. But the flip side is that the way I look at it is that if you go cloud computing, you have access to more resources that can help you manage those risks. So the service providers have built capacity in terms of resources to help you manage those risks, but those risks still exist. You can look at it in terms of national security, move all our data to the cloud that resides in the US or some other country. What happens if you have a dispute with that country? What happens to your data? How do you navigate those challenges at a national level? So these are things I need to consider as well in terms of how you migrate and what you migrate and where you migrate those things. The other thing is about, yes, you're going cloud, you have outsourced that service to someone, but the risk does not disappear. If your regulator comes knocking and doing a review, they're not going to look at your third service provider. You are the principal. Those risks still reside with you, and they're not going to disappear. And third party itself presents a different kind of risk you need to manage. When you have those services on-prem, you see those guys on a daily basis, you can evaluate those controls on a day-to-day basis. But when you move to the cloud, you're relying on third parties to help you manage those risks. So of course, you now have to do your enhanced due diligence of who are you migrating to and what services you are migrating to. So I think I'll stop at that and let Mrs. Odufa go ahead.
Thanks very much. I like the example, the very practical example you used, which is very recent in our memory, about when we had the cash shortage in Nigeria, and how we saw some of the digital banks, respond very, very rapidly, essentially because of the kind of infrastructure backing that they had. And indeed, as you said, most organizations starting now, the fintechs, and really in various industries, anything tech, they tend to just start native with cloud services. But as we have all said, we need to also identify and mitigate the risks. It's very important, or it's very interesting that you touched on third-party risk, which is a growing risk category in cybersecurity today. And you made the good point about the fact that outsourcing your services doesn't, you can outsource the service, but you cannot abdicate the risk. You still own the risk, and therefore the onus is on you to choose your cloud service provider carefully. Oftentimes, we're so eager to move on to the service, we don't look at the small print. Please look at the small print and make sure that you get your legal people also to look at the small print. Because again, some of the things that people get caught up in is getting their data locked up because they omitted one small service term of engagement or something like that. So it's important that we understand that the risk that we're also taking up when we sign on a particular cloud service provider. So yes, benefits, but we need to understand the risks and we need to manage the risks effectively. And essentially, I agree, all banks, all organizations are using it today. So I'm still staying with you, Femi, because we're talking about banks specifically today, and that is your portfolio. So what are these global and local regulations related to cybersecurity and data privacy that banks need to take into consideration when crafting their cloud strategy? Samuel had said regulation was a key consideration. So specifically, I mean, you may not be able to talk to all of them, but what are the key regulations? And in your opinion, are they sufficient to mitigate the risk?
Thanks. So the key one, let me start from our local environment, Nigeria. So clearly, I'm sure we're all aware of the Nigerian Data Protection Regulation that came out sometime in 2019. So that sets the tone in terms of the regulatory environment around data privacy. But it's relatively immature in terms of the fact that it's quite recent. And what typically happens with regulations that are issued, that it takes a while for people to understand, for people to develop structures and processes to embed in different organizations. It takes the regulator some time as well to develop monitoring processes to enforce compliance with those regulations. So that's a critical regulation that guides data privacy in Nigeria. Obviously in the EU as well, we have the general GDPR, General Data Protection Regulation, that was issued sometime in 2016 as well. So that regulatory foundation has been set, but then it doesn't stop at that point. So it's one thing to have the regulation in place. It's another thing to have the processes to ensure that is then broken down into policies at the various banks or other organizations, have awareness and training around what it means on a day-to-day basis for your activities and operations, and also for the regulator to understand how to then monitor and enforce compliance. So it's a journey which is started, and I think that is very fundamental in managing that process. Compared to other parts of the world where there's a lot of self-regulation, to be honest with ourselves here, we struggle with self-regulation. So the regulator most times is the one that drives that enforcement across organizations. But we started to see signs of enforcement. I know there were fines that were issued recently to some fintechs, and I think 1 or 2 banks, which just sets the tone for enforcement going forward. But what I see in the next 2 to 3 years is a lot of awareness. Even consumers are becoming more aware of their rights in terms of data that you own or you process on their behalf as well. You see instances where people go on social media and say they got a text from a bank, they never give their details or data to that bank, and then the noise starts generating. So that awareness has gone on a different level. And that's only going to make the banking system and the financial system and the country as a whole stronger in terms of governance around data. So, to summarize, is that we've gotten the regulatory framework in place. That foundation has been set, relatively recent, but it's a journey which has started. Awareness is going on across the public. Banks have developed structures and processes to embed it in their day-to-day operation and activities. That itself is a journey. The regulator too has started that enforcement and compliance. So I think on a general note, I think we had started on a good note. We just need to continue on that journey. Cybersecurity is a challenge in the sense that from a skills perspective, I think banks, I'm sure we're all familiar with the Jaguar syndrome. So that space in particular has been heavily impacted. Not just in banks, but generally across the industry. So skills is a challenge in terms of cybersecurity. But what banks are beginning to do is even to look at opportunities to outsource this. So we have banks that have set up security operations center, not just locally, but outside the country, so they can get those skills to provide that assurance around cybersecurity risk as well. But it's a very sensitive area. Is something that we still need to do a lot of work around, because if I compare the guys on the other side, the bad side, and how they've advanced in terms of their skills, I think on the risk management side, we are trying to play catch up as much as possible.
Thank Thank you. Thanks for that. And talking about the data protection regulation, as you said, we're all required to comply with NDPR. And just for the benefit of the audience, I'm sure we're all aware that we are required to file a report. We're required to ensure that, first of all, we implemented that regulation. And then NIDA, or now the National Bureau for Data Privacy, requires that organizations file an audit report annually, and they have become quite a lot more vigilant in looking out for people who are breaching that regulation. So this is something that we should all be aware of. And the NDPR mirrors the GDPR quite extensively. Right. And then, he spoke also about cybersecurity. And I think one framework that is relevant to banks when we talk about cybersecurity, even for cloud service providers, is the CBN Standards Blueprint. So whilst we may not term it a regulation, it is a code of conduct, if we can put it that way, that banks are required to comply with. And it basically includes a number of global best practice standards that banks are required to adopt, implement, and get certified to at various points in time. As regards cloud services, there are actually two key ISO standards, the one that speaks to the provision of cloud services and the one that also speaks to personal identifiable information on the cloud. I think it's 27078 and 27077. So all these standards, frameworks, guidelines, they all exist to ensure that we're doing the needful to help us to secure the data that we have in the cloud, and also ensure that the services that run off the cloud are effectively done. All right, so we're going to move on now to Samuel, and I just want to take that question a little bit further. Femi has told us a little bit about the services or the way that we have to adhere with regulation or comply with regulation. So, Samuel, can you just bed it down a little bit and tell us in what specific ways that these local and global regulations address the risks that are associated with cyber and information security? How exactly? Are you able to draw a parallel for each of those standards and the risks that are associated with cloud computing? Please tell us.
Okay, thank you so much, and thank you, Femi, for the points that you raised. So when you look at today, we have a number of local and global regulations. The important thing to note is the fact that we may not need, it's not about the number of regulations, it's not about the number of standards that we have. I think what is extremely important is how we are able to comply with those standards, how we're able to comply with those regulations. While the Nigeria Data Protection Regulation of 2019, I think NIDA has been, the Nigeria Data Protection Bureau now, they're doing a very good job in terms of just following up, ensuring people are compliant with that. I think it's important to know that those regulations are there to address specific risks. And I'm going to speak to some of those risks. As many of us seated here, we have accounts in banks. We use a telecommunication service provider. So you have your data out there that you have given to people. There is nobody here who will be happy to hear that, because an organization, that a service provider has moved its services to the cloud, that's why my data is exposed on the internet. Nobody wants to see that kind of thing. You have given out sensitive information to organizations, whether it's because you wanted to open a bank account, or you wanted to obtain a national identification number, whatever. We have given a lot of information out there, and there is a lot of data out there. But what these regulations are doing is to ensure that we are secured. And I'm going to just speak to some of them. Number one part is around the rights of data subjects. Before the release of the Nigeria Data Protection Regulation, so many people in the country are probably not aware of their rights in terms of, when it comes to the right of data subject. What right do you have in terms of the data that you have given to an organization? What do you have the right to ask the organization to show you the kind of data that they hold on your behalf? You have the right to even be forgotten. For some organizations, you have the right to tell them, I'm no longer doing services or doing business with you. You have to delete my data or something like that if there are no other regulations that affect that. So what we see is the fact that these regulations help in ensuring that our rights, we know our rights, and our rights are being enforced. We're able to enforce our rights with organizations. There are people who have taken organizations in Nigeria to court because they believe that they have not protected their data. That's one of the things that regulation does, right? You have to rely on something before you are able to do that. So one is the rights of data subject. I'm also going to speak to things around even incidents. Today, there are breaches that happen globally, data breaches. So organizations have issues, maybe because of third-party misconfiguration in the cloud, certain vulnerabilities in the cloud. Maybe their S3 bucket or some sort of cloud service is in a way is vulnerable, and someone has been able to take access or gain access into that, and there is a data breach. One of the things that regulation has also done is to ensure that these organizations must report. So it's important that they report those incidents. If there is an incident, you have, under NDPR, you have within 72 hours, you must report. You must tell the regulator that there is a breach. If everybody is compliant to that, it's a different matter, but there is a regulation. And that regulation is meant to ensure that when there are issues, you are told. So you don't need, an external person doesn't need to come and tell you, I saw your data on the internet, right? Those people that you gave your data to should tell you there is a breach. And I think those are some of the things that we see. The other one I want to talk about is all these regulations, NDPR, EU GDPR, provide certain guidelines around the fact that you need to protect this data. And there are heavy fines, penalties to be paid by organizations if they don't protect data. If it's found out that you haven't maintained that duty of care to protect data of data subjects, then there is a problem. So what we're seeing today is the fact that when you have these regulations in place, rights of data subjects is being made known to them. You also, in a way, also have to protect data. And I also want to just quickly talk about the general, if you look at banks in Nigeria today, they are also meant to comply with the CBN risk-based cybersecurity framework. That's also an important regulation for banks, right? That framework provides certain guidelines. And the fact that, the framework may not even be tied directly to cloud does not mean that it's not important to these banks. And of course, banks today are complying with this. A lot of banks are doing assessment. A lot of banks are putting controls in place to ensure that they are able to secure the environment. So I'm going to wrap up by saying that there are a lot of benefits in these regulations. And as we'll mature, just as Femi talked about the fact that there's still a place of maturity, as we mature into these, we will see more of those benefits. And as we go into cloud adoption, we will begin to see the reason why those regulations are quite important. Thank you.
Thanks. Thank you very much. You made the point that there's quite a lot of regulation. Regulation is important. And I think one of the things I will pull out of what you said in my own words is that regulation is required. It's a necessary but probably an insufficient condition for getting the benefits, because it's important that we know that regulation is not security. All right, so regulation is the baseline that we must meet, and there are benefits in meeting regulation. I'm going to go to Winga, but Femi, I'm going to come back to you to tell us how in the midst of all these compliance requirements, we want to comply with all the regulation out there, whether it is from the local regulators, international regulators, global best practice, and so on and so forth. We can still get the benefits. We can still be nimble. We can still be agile, in this whole cloud computing scenario. But before I come to you, Benga, tell us, if we set the context of regulation, frameworks, guidelines, and all of that within a broader governance context, what role would you say that governance plays in ensuring that we realize the benefits? From an IT governance viewpoint, we talk about benefits realization and risk mitigation or risk optimization. So in very practical terms, how can we have a governance framework that helps us ensure that in implementing, benefiting from cloud computing or subscribing to cloud computing services, we actually get real benefits that are not outweighed by the risks that we face? Please tell us.
Okay, thank you. Just going back to the point on regulation briefly, and Ms. Odufa made a very valid point. Regulation does not mean you are secure, you are fully compliant. It should be the baseline. I mean, there's several organizations we have seen who seemingly are compliant, who have all the certifications you can name. They'll reel them out. I mean, some organizations have perfected the art of getting certifications, PCI DSS, ISO, and so on and so forth. But the truth is, the fact that you have these certifications, the fact that you are sending reports in, the fact that you're sending that annual report to the Central Bank on cybersecurity does not necessarily mean, you have everything covered. So that should be the baseline. We should go way beyond what the regulation provides, because we have seen folks that have, all the certifications get breached and get damaged by hackers. Now, going back to the point on governance, I mean, governance is critical in your cloud computing strategy because governance sets the tone and defines the whole framework for how your governance strategy aligns with your business objectives. Your governance will also lay out, the foundation for how you can bring the two together and marry the two, because one cannot exist without the other. So drawing, for instance, from the central bank's cybersecurity risk management framework, the central bank has tried to define there and say, look, it needs to start from the top, starts from the board. Board takes responsibility, oversight, direction. Senior management also will be responsible for implementation of, the policies around cybersecurity, around your IT governance, and so on and so forth. And then, of course, there's a requirement for you to have a CISO who's responsible for the day-to-day. Also, it requires for you to have a couple of committees like the IT steering committee, the information security steering committee, and all these lovely things, that are there. Of course, there's also the requirement for you to have all the assurance functions, the guys in the internal audit teams, the control teams, the compliance teams, doing the necessary reviews, issuing all the reports they ought to do. And these are all fantastic things. But beyond that, organizations need to live the value, imbibe the culture, continually train their staff to ensure that they're meeting the requirements and going beyond the basic requirements as well. And for me, I think more importantly for governance, from a practical point of view, beyond meeting the baseline, I think the first thing we need to also always do is continual improvements. We're scanning the environment, we're doing evaluations, we're scanning emerging risks, we're seeing trends in the market and saying we need to tweak our governance policy in this manner to cater to what's going on in today's world. I mean, rapid technological advancements are happening every day, so we need to be up to speed. I mean, it's not enough for you to just say we have drafted a governance document or policy or processes and we wait for 3 years before we review. Because things are happening every day that require for you to react, for you to be proactive, for you to deal with, right? The hackers that are sitting down there, they're not just sitting down waiting for you to renew your policy in 3 years' time. So you need to be on top of your toes to be able to deal with issues as they occur. In addition to that, one of the things I also always recommend is training and awareness within the organization, and it cuts across everywhere. It's not just the IT organization that is responsible for cloud computing, cybersecurity, IT governance. It cuts across everywhere. So we all need to take responsibility, even with your little desk as a business person on the business side as well. You have some responsibility and a role to play in that as well. So I would say, generally speaking, governance is critical. But in addition to governance, we need to go beyond that. Let's put in the actual work that needs to be done beyond just putting the processes on paper alone and not doing actual work.
Thanks very much, Benga. I think you mentioned a very valid point about making this part of our culture. And I think that really goes to the heart of what it is that we need to do if we're going to translate all of these, regulations, frameworks, guidelines to our benefit. Sometimes when I see organizations who just want to comply just for the sake of the regulator, I honestly tell them that they're wasting their time. The truth is, you've got to do it anyway. So why don't you make it count? Why don't you get the value from it? Because as we have said in the panel, there's actually value to be derived from the regulation or the standard or the framework. So instead of just implementing it from the, as they say, the letter of the law, you need to look at the spirit behind it. And I think the most important thing, Benga also touched on it, that some of these standards and frameworks do for you is to support you in instilling a culture of continuous improvement. So they give you an approach, systematic way to ensure that you're improving continuously, because there are annual audits, and the auditor came last year. By the time he comes this year, he wants to be sure that you have improved. So it gives you that mechanism to make sure, that is all part of your governance framework. He also made the point that, governance is by necessity top-led. So it's oversight from the board that trickles down all the way down. And we know that if we really want to effect change and it's going to be sustainable, then it has to be driven by the top. And then we all have to be aware and we all have to be adequately trained. So for the part in short, Femi, because you're a chief compliance officer in a bank, so your job is to ensure that the bank is fully compliant. At the same time, the bank is a profit-making entity, seeks to make money and seeks to add value in various ways. How do you straddle this in very practical terms?
That question is a bit it's tricky. So let me provide some context around this. So if I look at the Nigerian regulatory environment, it's very complex. Complex in the sense of, one, the multiplicity of regulators that cover particular areas. And secondly, is around how explicit those regulatory requirements are. Then you now have the challenge of the letter and the spirit of the regulation itself. That's the context. Then the second context is around, I think culturally, we don't tend to self-regulate ourselves. We probably need someone to enforce compliance on us generally. So to the question I was asked specifically, how do I balance the need to comply and the need for business exigencies? I think it's about, one, having a culture that has been set in your organization. So it needs to be clear what approach you want to adopt. Do you want to be a compliant organization that complies with the spirit and letter of regulatory requirements, or you want to play around the regulatory requirements? So that tone at the top, from the board down to the executive management, is very, very critical. And that enables you as a chief compliance person or the risk manager to understand what direction that the organization is going to. That tone at the top has to be clear. Then, of course, you need to understand that their business needs to be met. But then there has to be a balance. So I think it comes with maturity as a compliance person or as a risk manager to understand that, yes, your role is to understand the regulatory requirement. You need to communicate, you need to enforce. But where there are opportunities to work with the regulator in a form of advocacy to drive changes is where you can play a very significant role to balance those things. So you can work day to day with your stakeholders internal and say, you can't do this, you can't do that, you can't do that. The law says this, the law says that. But then the challenge for me is to say, look, yes, the law says this. What is the intention of the law? Can we have some form of engagement with the regulator to say, look, this is what the law says. This is what the objective of the law is. if we do this, we still meet the same or achieve the same objective, and we can then grow the business. Because ultimately, when you grow the business of your organization, the economy grows as well, and then it transmits to the overall well-being of the country as a whole. So not just from the organizational perspective, it covers the entire economy as well. So where you have instances where regulations are inhibiting business growth, I think the onus is on the compliance officer to say, look, let's engage with the regulator. Let's drive advocacy to influence change in the regulations to drive business. And that's where the value comes from the compliance person. So when those instances come where you need to put your foot down and say, look, regulations prohibits us from doing this, you have some credibility to say, look, I've done a lot of advocacy to drive the business. We've influenced change in terms of our regulatory environment that supports the business. Then it makes your job easier to strike that balance between complying with regulatory requirements and business exigencies. But to be honest, it's tough. So I'll try to be as practical as much as possible. Occasionally, you find yourself in very difficult positions, but it's how mature you are. So you could have a meeting today and say, look, we need to do this, regulation says this, and everybody says, no, we need to go ahead. The regulation is not clear, blah, blah, blah. But it's for you to just take a step back at that point in time, allow tempers to cool, then engage again and say, look, we need to look at this again. We need to do on a different direction. Before we go this, let's engage with the regulator. Let's clear the gray areas. Let's drive advocacy to influence the change in the regulatory environment itself. So it's tough, but it's something we do on a day-to-day basis. Needs maturity, needs engagement, needs you to build credibility within your stakeholders, both internally and externally as a whole.
All right. Quickly add
Excellent.
something
Thank
to
you.
that.
Sorry.
Right. So, I mean, the example I like to use a lot of the time, especially for us who are compliance advocates, is you look at it like the business is like a Ferrari or a McLaren, and these cars are built for speed. They just want to move super fast. However, there is no Ferrari or McLaren that does not have one of the best braking system in the world. Right? Our job is to be that brake system. And you're able to say, look, you're speeding down the highway, you want to take a bend, you need to slow down a little bit. And every organization realizes they need brakes. So you need to be able to deliver that value. They need to know that you're that voice of reason who does not just want to stop the business completely, but you're saying, let us move with caution. Let's slow down when we need to slow down. Let's find a solution that works. Just like Femi said, if you need to engage the regulator, and indeed the regulator today is a lot more open-minded. You go to them, you engage with them, and they listen to you, and if what you're saying makes sense, most of the time, they will adapt and make changes as necessary. So indeed, that window is there. It's for us to add value in our work.
So just to add to that,
Thank you.
So I had a CEO once that used a different analogy, right, using Ferrari. That the brake in a Ferrari is not really to stop the car from moving, right? It's only needed in very critical situations that the Ferrari is meant to move very fast. That's the way it was built. So just to provide some context to that analogy as well. People look at it differently as well.
Okay.
Okay.
My own thought my own thought on this is that regulation, whether for cyber or for privacy, is not meant to impede progress. It's meant to enable innovation, meant to enable progress, right? And so for us, for those who are in compliance, I work as, consult in privacy and cyber. What I know clearly and what I've told people is, if there are issues tomorrow, if there are incidents, right, everybody will be running around. There will be trouble everywhere, especially if it's cyber incident. You see people on Sunday, on Saturday, having sleepless nights because there is an incident. And if we know that we need to do all this before now, I think it's better to just ensure that those things are done. So we shouldn't approach things just based on regulation, but approach it by looking at the benefits that we are going to get out of it. Thank you.
All right.
All right. Thank you very much
Madam
for all
Dufa,
those.
forgive me for
Yes, I'm
interjecting.
wrapping up.
what we're going to do in order to wrap up the session is I'm just going to open the floor for one or two questions, so that way we can have it in terms of summary.
Okay, can I just wrap up this point and then we can throw it open? So I think the point that has been made is regulation is critical, is important, is beneficial. But it requires trying to comply whilst also ensuring that we're getting maximum value from the business, requires adept, skilled stakeholder management. Because all that Femi was talking about and all the other panelists is really about knowing who your key stakeholders are and making sure that you manage them in a way to get a win-win value proposition from each of them. Because at the end of the day, directly or indirectly, everyone has the same goal, but they're approaching it from different points of view. So when we talk about the cloud, when we talk about adopting cloud services, then your stakeholder ecosystem gets even bigger and wider and broader. So think about your stakeholder management. Think about having clarity onto the key stakeholders, understanding their interests, understanding their power. You know that grid that talks about interest and power, plotting them and approaching them as such. It is possible. It may not be easy, but it is possible. We're happy to take questions now.
Thank you very much, ma'am. Nothing good is ever easy. And I imagine that we're going to just take one or two questions. I'm not too sure why Femi's choice of the car is Ferrari. Some of us prefer Lamborghini, but we know the brake system also works. And Glory, please quickly, we'll just take two questions. Ladies and gentlemen, we need to wrap up this session. Already, I see 3 hands. Glory, hurry up, please, hurry up. Okay, we'll take only 3 questions, ma'am. And so the question as they come in, I'm going to ask that each of the panelists perhaps use that to wrap up and summarize, and then you can give a total overview, and then we can close the session. Over to you.
Thank you, moderator. Mine would also come as a form of contribution to what Femi and Samuel have said in closing. In terms of managing your colleagues, in terms of managing management to drive compliance and risk management value, I think we must think more proactively. That's why it is very important to integrate your risk in your strategy from the word go. So you don't have a situation where you need to go back to regulators to find out if certain steps need to be taken concerning some management decision. So you from the get-go know what regulation has said concerning that matter. So I want us to start looking at it from that perspective, so that we don't over-labor some decisions, because like, for example, products, you want to hit the market running and you are scared of allowing that product fall in the hands of your competition, and you want to go back to regulator. What you will find is that your regulator, sorry to say that, somehow those information gets to your competition. And the same product you are wanting to launch, because you're going back and forth, because you've not done the risk assessment in your strategy, has gone out to your competition. So I'd like to advise that additionally, we should be proactive with our risk integration in our strategy as we go. Thank you.
Thank you very much. He's going to be joining us in the next panel session. We have 2 more questions or comments. Please make it as brief as possible. I'm very sure it's great to have Madam Adedoyin here as our moderator. She's the MD and the founder of the Digital Jewels Limited. We are so glad to have you. I just thought only 3 questions. Okay, briefly, please.
Yeah, my question is just around what are the banks doing to mitigate risks on a local level? Because to forestall incidents...
What are the banks doing what?
To mitigate risks on a local level.
Risk on the local level, okay.
So,
my panel discussed more about products. But the services that are intangible, and the intangibles on services, in terms of data, securing data, will be more optimal.
Okay, so is that a question?
It's a question with a comment.
Okay, I'm very sure my chief compliance and you got that. Did you get that? I'm not sure any of us understood.
Okay, I'll just phrase it again.
Okay.
Looking at operational efficiency, for optimal operational efficiency, you talk about products. When you now compare with the services in comparative, the intangibility nature of services will not have acquired the optimal level.
you get the point. So we're looking at product and services. Product obviously is a tangible element to that. The services are intangibility, so to speak, and we're looking at the operational essence that connects with both. So I guess this is a dichotomy between that which is physically felt and that which can be spiritually felt. Either way, we get the idea. All right. The last question before Madam, I think, must have gone offline.
All right. Thank you so much. My question is regards to pragmatic approach to enforcement, because sometimes I feel, especially those in the financial industry, they may see a loophole in the compliance. All they are required to do is to have a strong security infrastructure, but we know that cybersecurity is so dynamic, that threats are always so dynamic. So I feel that enforcement should target results rather than just the whole compliance aspect. Like what happens when a business is so careless with clients' data or with clients' money, and then they are hacked because of carelessness? I work with a cybersecurity consulting firm. I know what I do on what we see on the street, and these guys don't pay much attention to security, as it were, because they're rather to invest in it. And then at the end result is that they get hacked. I remember that happened last year. I prospected, and then within 2 weeks of me telling them, hey, you guys could be hacked. Let's help you out. They were hacked. And that was a big problem. So what happens to such businesses? Are there more pragmatic approach, a stronger approach, so to speak? Because I feel if there's a stronger approach, many businesses wake up knowing that it will cost them more money if there's incidents than if they just, they are getting away with it right now.
Okay, are you guys into ethical hacking, or you're into
yes, please.
Yahoo hacking? We need to be sure.
We protect from them.
So the ethical hacking, because you want them 2 weeks after the thing happened. We want to be sure that. Okay, so because there has to be that distinguishing element. Ethical hackers actually help to provide solutions to avert some of those crises. And I know that sounds humorous, but it's a very serious matter. But I'm glad you had that clarified. Madam Doyin, over to you, Ma. And so as a way of wrapping up, each of the panelists can respond, and then you give the overview. Thank you, Ma.
Thank you. The connection broke at some point, but I know there was a question that was directed specifically as regards the banks. And the last one that was talking about the consequences of or the results. I think those are the two that I heard. I don't know if I missed any. So which of the panelists, the one that talks about the bank, perhaps Linga or Femi will want to take that. And then the last one, perhaps Samuel will want to take it. How do you want to run?
All right, the banker amongst us here should first of all, Femi.
I'm sorry, apologies, I'm struggling to recollect what exactly was a question about banks, but the point around enforcement, I think that comment is not being fair to banks generally, because banks have invested heavily in cybersecurity, right? If I look at the kind of investment we've done or banks have done in the last 2 or 3 years compared to 5 years ago, is massive. I know banks that have not just SOC centers in Nigeria, but have SOC centers in the UK, in the US. I know banks that pay differential salaries to guys involved in information security and cyber security. And there are consequences. Banks lose massive amounts of money. That itself is punishment. I have colleagues that have lost jobs because there have been cyber attacks. So those things are not taken lightly at all. Every board is a top agenda item: cyber security, information security. So I don't agree. I don't think it's fair to say that banks don't appreciate that there needs to be consequences on enforcement. I think on the flip side, banks recognize that and have taken steps. Is this sufficient? Can they do more? Yes, definitely. There's always room for improvement, just like anything else. But that is a top corner agenda item in all banks today.
So you're defending the banks, but I agree with you that there's a lot of work that is being done. However, I think I must make the distinction between cybersecurity, which is where we're trying to ensure protection, and building cyber resilience. Because the truth is, even the most secure organizations, secure quote unquote, or the organizations that have done the most work, still occasionally get breached. If you have a very determined cyber adversary or attacker, probably will still breach. However, what you want to ensure is that the impact is minimal. So they get away with little or nothing, And then secondly, you're still able to continue business and you're able to recover very quickly. And that's when we start talking about cyber resilience, because I think that organizations have come today to realize, I mean, whether you look at the most sophisticated US defense organizations or any of the organizations that have the most sophisticated, complicated infrastructure, they will still get breached occasionally. So we need to move from just security, which is looking at prevention, to accept that there will be breaches, but we want to ensure that we want to make it very, very, very difficult for the cyber adversary. And you know, the psychology of the cyber criminal is a minimum effort, maximum reward. Minimum effort, maximum reward. You don't want to be the low-hanging fruit. You want to ensure that if you're going to be breached, that person has done a lot of work. And when they do the work, there's really nothing that is worth their while to do. So I'd like to shift us from that perspective where we think we're doing all of this so that we will never be breached. You will be breached sometimes. It's not, you know, we say it's not when, it is, if you don't know that you were breached, then you're deceiving yourself. What was the impact of the breach? I think that's what we want to look at. Were you able to continue business? Did your customers lose confidence in you when that breach was going on? Those are the issues that relate to cyber resilience, in which case you start to bring on some of the disciplines that are associated with business continuity into cybersecurity.
Fantastic.
Okay, so the last question. Yes, so I think there was a comment or a question. Any of the panelists who want to take it so that we can let our delegates go for lunch. We're the ones standing between them.
Thank you very much, Madam Doing. You just sang my song that has been playing in my mind. I'm very sure you want to respond as a way of wrapping up the session, each of you, and then attend to some of the questions or comment made. Thank you.
Okay, so I mean, I think the point I will respond to is also on the issue of enforcement that the person who asked that question. I agree perfectly that banks have done a lot, but just as Mrs. Odunfa said, it's important that we know that you can't do too much, right, when it comes to cyber, because the adversary, the hackers, the malicious users are not also resting. As you are adopting solutions to get things done, adopting new technologies, you're even using AI, using cloud, using different solutions to secure yourself. Don't forget that those solutions are also available to the attackers out there. So it's important that we just continue to do more. Just know that it's a battle that you can't say, we have won, we are out there, right? You need to prepare for when there are even issues. How quickly do you even detect that there are issues? There have been cases where there have been issues for months before some organizations even got to know. So how quickly do you even detect when there are issues? I think that's the point I would just need to speak to. Thank you.
Thank you.
For me, I would say, I mean, the focus is on banks, but beyond the banks, in the ecosystem, you have the payment companies, you have the technology companies, you have all these guys in that value chain, and we're only as strong as the weakest link. So yes, the banks indeed do have deep pockets, are spending money, they have huge pockets for cybersecurity, defense, and so on. But for NIDA, for NDPB, they have this regulation that requires for these guys to send in reports every year. Now, I always wonder, and I say to myself, if they get thousands of these reports every year, possibly, how could they possibly review them? What do they really do with these reports? Do they have the capacity and manpower to review these reports and then go in there to do these reviews? Perhaps it's time for them to maybe change their approach to the similar approach that, you know, ISO organizations use, have the QSAs go in there, do the reviews, and send the report in rather than the opposite. Maybe that'll be more effective. But there's a need for other guys in the value chain to be properly regulated because they're outside the ambit of the CBN. The CBN has issued regulations. Banks, to a large extent, are complying. But the other guys, critical that we ensure that the compliance.
That's true. That's very true. All right, Madam Doing, I'm very sure Femi has
Okay.
Could
Yes,
I can
so for
recollect
me,
the last question around penetration testing from one of the members of the audience. So we do, banks virtually, in fact, it's a requirement for you to do penetration testing, so that happens. Just to summarize that, cybersecurity is top agenda item in every bank today. At the board level, at management level, the level of investment and awareness that happens in terms of cybersecurity over the last 2 or 3 years is massive. But like Mrs. Odunfa said, what is important is these things might happen. Probability of happening is high, but how resilient are you to quickly identify, remediate, and ensure it doesn't happen again? Even in the US, most global organizations have suffered from cyber attacks as well.
That's true.
So just to put that into context, that it's a journey, a lot of improvements over the last 2 or 3 years, but we still continue to invest in cyber security, not just in the banks, but across all sectors of the economy.
All right, thank you. Madam Doing, over to you, ma'am.
Thank you very much. So for me, it's to thank my panelists. I think they've done an excellent job. And to the rest of us in the room, just let's remember that data privacy, data protection, cybersecurity is critical, not just for our cloud services, but indeed our entire ecosystem. And the point has been made, we need to do all that we can for our own organizations, but don't stop there. You are only as strong as your weakest link. So look at your ecosystem and see how you can also assess the risks and try and also help them improve. Because if not, you will suffer. But please, let's take away from this panel the fact that our cybersecurity practices, policies have to continuously improve. Our data protection, privacy practices and policies have to continuously improve. And if we're taking a cloud approach, we cannot abdicate our risk. The risk we still own it. So we have to still continue to mitigate or optimize the risk. Thank you all for listening. I'm sure that it's been well worthwhile delaying your lunch, and I'm sure that we've all learned a thing or two. Thank you very much, and God bless you.
Thank you very much, ma'am. There is no, please can you put your hands together for her and the panelists? There's no better person than yourself to have anchored this particular session. It felt as if you were here, although we have the vacant seat here. So in my imagination, I'm seeing you seated here, and helping us understand how important for us to be able to gain our position, especially with cyber resilience. And one of the things we've mentioned, the weakest link, obviously, is all the collaboration partnership. So ladies and gentlemen, it gives me great delight. But I must say, if you're buying a car, whether Ferrari, Lamborghini, Toyota or Innocent, make sure the brake is working very well, because you never can be so sure what is going to come around the corner. Ladies and gentlemen, one more time, can we put our hand together for Madam Adedoyin Odunfa, as well as Mr. Femi Jayola, Samuel Asiyabola, as well as Benga Hamstra for a wonderful job they've done. I'll ask you guys to please come up front here. Let's have a quick photo session. Cyril, you want to join them, and of course, Osioke, please join them as well, as the case is earlier on. And then let's have this moment. Now we're going in for lunch. Lunch is going to run for only 30 minutes. We're back here for the final session. But before you go for lunch, a quick instruction. If you do not have this tally number, this ticket, please, it means you cannot have access to lunch. And kindly follow the direction of my very wonderful, delightful Glory here, who has been working with me, and Chris behind the bouncer. We insist that nobody goes through that back. So please make sure we hurry it up. Take what you know, but go with your lunch ticket. Everybody here has a lunch ticket and a tag, without which we cannot allow you have access. But first, we'll let the speakers and our guys in the front row to please go all with Glory, and let's do this as quickly as possible. While you are doing that, please be mindful of your personal items, your laptops, your phones, your handbags. We do not want to have any incident of theft, so to speak. Just like we are dealing with cyber security, we also want to do with in-hall security as well. Please kindly make sure you are mindful of your personal belongings. Lunch is served. It's for 30 minutes, ladies and gentlemen. We want to come back here and start up the track on remittances and cross-border regulations. I'm glad to announce that all of my panelists are here, and my moderator is also here. She is the MD and CEO of FITC, one of our supporters. Mrs. Malize is here. Tunji Odumoboni is joining us virtually. Osita Inwe is here. And of course, Ehis Uwagwe is going to be joining us. He's the Chief Risk Officer and ESG Manager of Tangerine, as well as having two other members joining us virtually. So please, let's quickly hurry this up. Ushers, can you quickly direct them? Let's not sit down. And as soon as you are done eating, please vacate the seat and let other people have space to come in, please. Quickly, let's do this. We do not have so much time. We have other times. Okay, please sit down. I was told that you guys should sit down. They are going to direct you as well. Glory, let's be mindful that we have about 30 minutes for all of this. as the case might be. Thank you, ladies and gentlemen. Can we have some house music? Make sure you have your tag. Make sure you have your tag. Thank you. All right, my ushers and of course the servers, please can we hurry this up? We can't keep the rest of the delegates seated. They have to have lunch. They have waited since morning and they need to replenish. So let's quickly do this and let's do this as fast as possible.
Deduct my money and they debited me within seconds. They will reverse it so that I can go ahead with the transaction. But recently, my recent experience, I was debited the sum of 6,500 or thereabout. I was debited. I didn't get the value, so I had to go
I thought they say stop.